Okay guys, we're going to just go a little bit deeper onto the smaller time frames now, and I'm just going to highlight what we need to really look for in terms of how to use Fibonacci as a confluence with our entry strategies, okay? So we've got gold here in front of us on the daily, and I've just found this. I just want to recap from the last video. So gold, we have the most recent high and low here. So this could be an A, B, C, D, and this could be an A, B. So A, taking it from where the support level is up to the top to line up with our daily resistance. So we have A, B, and then we have the C retracement just here, 61.8. It's between the 61.8 and the 50. I would more or less class this as a 50 because it's a swift movement back to the upside, and we didn't really hit the 61.8, and we came very, very shy from the monthly support 1300 as well. So with that being said, what do we have here? I can see a hammer, okay? There's a hammer candle right here, rounding out the bottom. As you can see, we also have the daily area of resistance, which could have been support around the time of where this price action was trading. And we're back above that level now. So with Fibs, assisting us with Fibonacci confluences for entry, one could be the simple counter trend line. Obviously, we don't really want to use this on the daily time frame, but just as this example is right in front of us, I'm just going to show you what we would actually be looking for in this case and in this scenario. So number one would be the rejection from one of the Fibonacci levels. Two would be, again, the moving averages can help us with the crossover, okay, to give us an overall idea of, okay, get ready, the moving averages are going to get ready to cross over now. This could be something that we're waiting for. It could be an extra tick box to our confluences and so on. So we can get the crossover, and then we could get the breakout above the counter trend line. Targets on gold at the moment, 1408. This is giving me for this actual Fibonacci. I'm just using this as a, whereas the other currency pairs I've gone through, I was more or less very, very confident on those overall directions. Now with gold, this kind of conflicts something I'm looking at on the bigger picture, but I'm just using it as an example with a counter trend line. So anyway, we have the crossover. We could await the breakout above the counter trend line and above the resistance 1350. And then the long position could be executed to our D extension. Now with the counter trend line, in this case, there will be a huge gap from where we could potentially be closing above to where our stop loss could be placed. However, on a smaller time frame, on a 2 hour, on a 4 hour, and sometimes on the hourly, but I did say let's try to refrain and not go down to the hourly as much, because the 4 hour and the 2 hour are going to be our best time frames for execution. So if we do get a break above here, we can go long, stops 15 to 30 pips below the last high or low in this case, and we can then go for the overall fib extension target. Now in this scenario, if we do have an area of resistance, in this case on a bullish Fibonacci, just before our minus 27. Now you've heard me speak a lot about the minus 27, but yeah, we can always take the minus 61.8 target 2 into consideration, but this one is the one I personally look for in order to take my profits. This one's great as well. Only if we break above it, it can give us an idea as to where the market can potentially go. So let's say we got our monthly resistance 1400. If we break above that, we know already there's 75% chance we may be headed to 1450, our weekly area of resistance. Now, with all of that being said, that's just one confluence for an entry strategy. That's the counter trend line break using the ABCD in the overall direction of the trend. Let's see how this looks on the smaller time frame. So that's the daily, remember. If we go down to the 4 hour now, I'm just going to copy and paste the fib exactly onto the 4 hour time frame. Now this is what it's looking like on the 4 hour time frame. As you can see, this is the 50 level, the red line, and our minus 61.8 extension level is coming in all the way up here. Now the daily counter trend line was just across here, and as you can see, if we really waited for the daily to come through and break above that. Yes, it will be a higher time frame confluence. However, we're missing out on a lot of the market movement on the lower time frames. So if you set up your charts where you've got 2 or 3 screen set up there, and I'm even going to put it onto this 2-hour time frame, we can use the bias of the daily. So we can be monitoring the daily in this box down here. We have the Fibonacci and we know where it's potentially going to go. But instead of waiting for the trend line break and so forth, we can zoom into the 4-hour per se and look for entries around here. So in this case, we could just maybe have found a simple box area of consolidation like that. And then we could recognize what's going on the higher time frames, i.e. we're looking at the 50% retracement back to the upside. And instead of waiting all the way until maybe in this case of gold 1355 or 1360 to go long, we can zoom into this and we can use this higher time frame perspective, and we can maybe enter upon a break of this consolidation range here, or if we again recognize any of the other candlestick formations and got a 3-pin pattern here, 1, 2, and 3, we can enter long there. Or we can simply wait for the breakout of this region, because the market here is consolidating. That's what the wicks are all about. And then see, we have the crossover here as well. We have the crossover and the break above. So instead of waiting another 100, 150 pips or so on gold, we could in fact enter from the break of this region, because we know we got various areas of support right here. And then we could go long, we could place our stop slightly below, 15 to 30 pips below the low with an entry here, and then go for the overall Fibonacci target. So I'll show you what I mean. So if we go long at the end of this candle here, this green one, the breakout candle, stop loss 15 to 30 pips below there, and then our take profit is going to go more or less up here. So if I just copy and paste that onto the daily, that's what it looks like. So that's a great risk reward of nearly a 1 to 3. So I've used the Fibonacci on the daily. I've said we could wait for that trend line to break. However, if we bring the data down from the high time frames to maybe the 4-hour, the 2-hour, we can get a better entry with a greater risk reward. Now, we could have waited until this came through, and the confluences probably would have been stronger in that case. However, the risk reward wouldn't have been as strong. We're probably looking at a 1 to 1, 1 to 1.5 at a push. So sometimes if the confluences don't line up, the risk reward may be better in some instances. So, and that comes down to your personality and character as a trader. Okay, so that's one example of how we can use that. Right, number 2. We have the GBP USD over here. So fib retracement, we're going from significant low up to the significant high, which is just here. We have a 50% retracement, 1, 2, 3. This is also a 3-pin pattern, guys. So you could have easily entered, okay, after this daily candle. So your entry would be upon the daily close. Your stop would go 15 to 30 pips above the middle wick, below the middle wick, sorry, in this case, which will be down here somewhere. And then your risk reward, you would line up your risk reward. So if we went long, let's just put this a little bit smaller, okay, and then take it to the target. So if we went long at the end of this daily candle, the close, we've got 1, 2, 3 pin pattern, driving out the higher low on the 50% fib. This is a risk reward of 1 to 4.3. We have our target, number 2, we have our target 1, which you could take profit at first or take the trade out completely, and that will give you a 1 to 2.6 risk reward ratio. As you can see, we broke above that now, so we are now headed on the GBP USD to the second target, which is the minus 61.8, just below monthly resistance 1.3500. So that's a great risk reward. Daily Fibonacci, yes, we could have entered from the daily alone using the 3-pin pattern there. Alternatively, we can just copy and paste this on a smaller time frame. All right, smaller time frame, 4-hour time frame. We actually have a more of a refined viewpoint as to what's going on now. But still, the daily, I can just tell by this price action, there wouldn't really be too much of a difference. So we have this consolidation zone at the fib area support there. We have the crossover, and then we have the breakout just above the actual breakout, because you'll find that the market may tend to consolidate at and around the fib levels. So what's good to do, guys, is just map out where you can see that consolidation. Simple box tool. We have the breakout above there, we have the crossover. So again, we could have entered around here. So as you can see with our risk reward tool, it's not too much different than the daily. So sometimes you can enter off the daily. I've already mentioned this. We don't want to be entering off weekly and monthly time frames. We don't want to do that. We always want to just take our time to see if things can be refined and we can get a better risk reward. But as you can see now, moving averages have stayed up. We did bang our head on minus 27. We broke above that now, and now we're heading to the minus 61.8 and the monthly resistance 1.3500. There's no need for us to go down lower on that one. Euro USD at the moment, I was looking at this being a potential. Okay, over here, we have some news out that came through, and we spiked again to retest the 50, depending on the 4-hour close. I've just gone through the other video on the daily close. If I see some kind of reversal on the 4-hour and a very, very weak close on the daily, I might say, okay, there's a potential for a short opportunity. But it's run into the fib now. There's no trade setup as of yet. Even the 2-hour time frame isn't bringing anything through. So I would wait for any kind of candlestick reversal formation, 3-pin pattern in this scenario right here. It's not giving us an opportunity to go ahead and draw a counter trend line on there. But from where we are now, currently down to target 1, we're looking at 200 pips, or just under 200 pips, sorry, 150 pips. Now, see, with that being said, there isn't really any way we can refine this, and sometimes you might have Fibonacci's that more or less clash. So we had the A, B, C, D on the daily, and there's a potential for this 4-hour to reverse and come through. I'm still sticking with the daily for now because I do not see any reversal yet on the 4-hour time frame. On the 4-hour time frame, and the higher time frames are more or less going to be the most reliable. However, a lot of the time as well, you just have to ensure you have factors that line up from time frame to time frame. The daily's up, the 4-hour could potentially be down. It's not down yet, but in this case, don't trade. Wait for stronger confluence and stronger signals for going forward. So overall, you know, the strategies we're looking for with the fib, we're looking for consolidation ranges around the Fibonacci retracement areas, as we've seen on the pound there, and a breakout and a crossover. We could mix it up with a counter trend line as well on the lower time frame, something like that there, and wait for the breakout above. This could also be riding on a trend line, an overall trend line. So let me just put this one on as an example. So at 0.1 across 0.2. Okay, that could also be coming in there nicely as well. So counter trend line breaks, moving average crossovers, 4-hour, 2-hour. Sometimes we can enter on the daily. Standard consolidation zones and sideways price action around any of the fib levels. And it's also great, you'll see here for yourself how things will come together alongside using fib with your key levels. I'm going to try to do as many Fibonacci trade examples as possible. I can't really find too many recently. I've missed a few because I'm away at the moment. But on the weekly breakdown examples and the weekly breakdown videos, I will be spotting fibs, whether it be on a weekly, daily, 4-hour, and helping you guys with the entries and just pointing out potential scenarios for Fibonacci trade setups. So that's that, and that's fib for now. Okay, there's 4 videos here on fib. Just to, again, you're going to have to read the book through a few times. Other than that, I'm going to try my best to help you guys. But once more, it's great to save your before shots, save your after shots to see how your Fibonacci analysis is playing through. So that's that for now, and we're going to go on to the next section, which is going to be vital for your success in the long term. I'm going to be, again, breaking down some of the strategies one by one, just to give us a recap of what we've gone through so far. But this is just the art of reading price action overall without any indicators. I don't really consider Fibonacci to be an indicator, okay? But one thing I'd like to just end on is 61.8% is our favored level, okay, our favored level. And if we're trading on the 61.8, sometimes we can place our stop loss 15 pips below the 78.6. Make sure you use a risk reward tool. Again, it's great to write things down. It's great to save your daily charts, weekly charts, and then come down into lower time frames. Just take your time. Don't get too confused. Don't start drawing too many fibs. But by now, hopefully, whatever level you guys are at, from joining the Astro FX course and going through all of the videos in the book, you have a better understanding of reading price action from top to bottom and finding the overall direction of the trend, which will help you to then go ahead and place Fibonacci. Okay, so look out for the next videos, look out for my weekly breakdowns, keep practicing Fibonacci, and you'll see for yourself how magical this tool actually is if you use it properly. So ABCDs, that is all we need going forward.